Yeah, what's good, cryptocurrency fans out there? Welcome back to the Everything Altcoin channel. Today, we're going to be talking about how AI compute is becoming a financial asset, because you guys probably missed out on a lot of different things that have been happening. Recently, Larry Fink called compute a new asset class. Not only that, the CME group has launched a compute futures, right? So now it's looking like AI compute is not just infrastructure no more. It's becoming a tradable asset, investable and tokenized, right? We're going to talk about what this means for crypto, some altcoins that we can look into and things like that. Now, after Larry Fink has honestly talked about compute becoming a new asset class, a lot of people started to look into different tokens: Render, Akash, IO, Tau. Of course, these are some big ones. I'm surprised Crypto Rover doesn't mention VVV, as this is something that a lot of people also has been very bullish on. But this is a huge thing. This could be a good turning point for crypto, honestly, because crypto could actually merge compute as a new asset class and bring it together with blockchain and things like that, because this is going to be pretty interesting. And we already seen the success of it behind VVV as of right now, because you guys already seen how crazy VVV has pumped. But not only that, I'm starting to see articles here like this. Pretty much the CME group partnered with Silicon Data to create a futures market for compute power. The NYSE partner company Intercontinental Exchange, which is ICE, announced GPU compute future contracts with a pricing data firm called Orin. Right, so this is a lot that is happening as of right now. We didn't think compute was going to become a new asset class, but if you look at oil is needed in everyday life. You could have now compute there, because if we're going to get intertwined with AI agents, robotics, all of that, they're going to need inference and compute. So obviously this could become a new asset class for people to start to bid on, right? And it's probably going to grow crazy. And that is essentially because AI models need GPUs to train and run. So the demand there is going to be exponential, right? But the supply is going to be constrained. Right now, Nvidia is effectively the central bank of compute, if you could think about it that way, right? While you have companies like Google that signed a $25 billion TPU data center deal with Blackstone. OpenAI is filing for a $1 trillion IPO. SpaceX is also coming out very soon. All of this depends on compute access, right? Recently, if you guys don't even know, Anthropic and Elon Musk had pretty much struck out a deal, essentially to give them new data centers. As you can see here, the cloud makers need all the computing capacity it can get, and SpaceX controversial Memphis facility apparently has it, right? So they've now teamed up with Anthropic to help them get some more data centers to get better compute, because people were complaining about Opus 4.7, how it wasn't that good. But now with more data centers and more compute, they were able to launch the new AI model of Opus 4.8. right? Now, these models they're coming out pretty quick. It seems like every month we're getting a new upgraded model, right? From like the big three. You got your Grok, you got OpenAI, and you got Anthropic. Then you're going to have the open source models as well that's pushing their models quickly as well. So a lot of this is not going to happen without compute power, right? So compute is very important as of right now. Now, we also know how important decentralized compute will be, private compute will be, and this is where I believe crypto will be able to tie in as well, right? We've seen how closely crypto and AI has been interwoven so far. When it comes down to the AI agents, we've seen big talks of AI agents, and that has applied into crypto. For robotics, it hasn't happened just yet, but I believe that will happen. But the next iteration now to all of that, as AI agents continue to become bigger and bigger and bigger, is now the compute side of things. And it's now being called inference capital markets, right? This is where you're going to have Venice, which Kevin puts out this tweet. Venice essentially kicked off this category. We all saw when Venice went crazy, right? This was like what everyone on crypto Twitter has been talking about, and it honestly hasn't stopped yet. It's actually still pretty much hovering around its all-time highs at $17.96. Let's just call it $18 even. This is while Bitcoin just took a tumble from 82 or something back down to about $73,000, and Venice has not shown any sign of weakness as of right now, right? So this is important to look at as of right now, because when Bitcoin turns back around, Venice could be a big runner. But there has been a new cohort of projects that have actually been tackling the whole inference capital markets as well. You guys already know Dolphin AI. We have been talking about that, right? What they're tackling is basically a unique thing, right? AI lab plus the centralized inference approach. Then you got OpenServe, which can dramatically cut inference costs with the serve reasoning model, right? We talked about that in that serve video. Then you got Shoots AI, which is pretty much doing what Venice is doing, but it's on BitTensor, right? Which is another privacy-focused inference provider and part of the BitTensor ecosystem, right? Next, you got a microcap. I'm not gonna call it. Yeah, it is. It's a low market cap right now. It was a microcap, right? It's called Surplus, which also offers compelling pricing by aggregating access supply. We're going to be talking about that later in this video here, because I believe this is a low market cap altcoin that you guys can keep an eye on for if inference capital markets as a full narrative fully takes off. I believe it will, and you should be positioned in that as well. If you do have a AI portfolio, AI focused portfolio, you do want some inference projects in there, right? This is how I'm building my portfolio as well. So you guys already know, I asked Asai, what is its thoughts on inference or compute becoming a asset class, right? Now, before we get into breaking down what Asai has to say, I want to ask you guys to subscribe to the channel if you guys haven't already. We're on the road to 30K subscribers. If you guys want to help out with that, hit that red subscribe button. Don't forget to like the video, comment what you guys think down below. And if you guys want access to the best Discord group, the best terminal, you guys need to sign up for that Patreon group. As you guys know, we've been killing it again and again, using these micro caps to stack up some more dry powder to add to the side so we can add into our main portfolio once we are ready. We've been posting some of the plays that we've been getting into recently here, right? You guys can see we kicked it off with pod and we killed it with some other micro caps as well, just to multiply our dry powder. But with my group, you just don't get the calls, you actually get access to the best terminal in crypto as of right now, which is the Altcoin Chasers HQ, and you get access to Asai, which is our AI agent in the HQ. You guys can see everything that the HQ brings you here, right? And then you can watch a full video on how the HQ works. And if you guys want to get access to the Patreon, you guys can use Asai code Asai 2026 to get 40% off your first month. This is going to help you guys test out the group, see if the group is for you guys pretty much. Lastly, if you guys are looking for a cold storage wallet, I recommend Tangent. This is what I use. Not only is it good cold storage wallet, but it also doubles down as a debit card that you guys can use to make purchases across the world as well. So if you guys would like to use that same thing that I'm using, use code everything altcoin, save yourself 10% on these Tangent wallets. And let's get right back into the video here. So why does AI compute fit the asset class definition? An asset class needs three things: standardized demand, price discovery, and institutional grade infrastructure. AI compute is checking those boxes faster than most people realize. The demand side is massive and growing. Goldman Sachs cited AI inference as a $7.6 trillion market. That's honestly insane numbers, right? GPU spot prices for H100 went from $3 an hour to $8 to $10 an hour during peak demand cycles. That's real price discovery on commodity that scales infinite, which is exactly what makes something a tradable asset, right? VVV's model, stake VVV, get access to AI inference revenue, feeds back into buyback and burns, is the clearest tokenized version of this in crypto today. This is why I've been telling you guys the model that Venice has put out has actually been very strong, and shown why Venice is going to be a big blue chip very soon here. Then you have the infrastructure that is being built out, right? BitTensor's subnet 4, which is basically already running inference market with real Tau denomination as pricing. Then you got Akash, has 500,000 registered GPUs and is a decentralized answer to AWS. Render has processed millions of rendering jobs. They're not theoretical, they're functioning compute markets with live revenue. And of course, the institutional validation is thriving. If you guys don't know, Robinhood did list Venice not too long ago, right? And the Upbit adding it, Coinbase incubating X402. These are a lot of different things that are starting to show you guys that compute is going to be a big thing. Now, obviously, Asai tells us it's, bear case and things like that. So it has to tell us the honest caveat to this. Right now, it actually believes that we're not fully there yet. It's still in the late emergence phase to early growth phase. That's pretty much what it's telling us about compute becoming an asset class, right? But I think this is happening quicker than a lot of people are really realizing. So pretty much right now we're in phase 2, right? This is from 2025 to 2027. Proof of utility, compute networks demonstrating real revenue and adoption. We're here right now. Phase 3 is going to be from 2027 to 2030. Institutional adoption, ETF, custody solutions, and standardized benchmarking. Now, what does this mean for my portfolio? If you guys don't know, like I told you guys, my portfolio is based on AI, heavily based on AI. And Aside knows that. Aside would know that for each user as well. So if you guys like RWA a little bit better, Aside will know that you like RWA a little bit better, right? But giving your portfolio the AI narrative, mid-cap, long-term horizon, the asset class is legitimate, not a meme, VVV, Tau. It does also like AI XBT. Aside just loves AI XBT there, right? But the time frame for AI compute becoming recognized as an institutional asset is probably 3 to 5 years out. I actually think it's going to be a little quicker than that. I just think everything in AI is just moving so fast that it's hard for us to, actually fathom how fast some of these things is actually moving. Even with AI, I think they don't even know. But the bottom line is, yes, AI compute will become a legitimate asset class. The infrastructure is being built, the demand is verified by trillion-dollar cloud spend, and the tokenization layer is already live. The play right now is before it becomes boring institutional grade infrastructure. This is basically, which means you're going to have to look into VVV, you're going to look into Tau, other altcoins we will be talking about in this video here. So let's get right into those altcoins. Now, we already brought up Venice, which just ran up to $18, right? Nothing too crazy, but it just pumped to $18 in the same video here, right? Next, with Venice, a lot of people aren't really talking about DM here, but DM here is going to be doing something very unique that we're going to be covering in just a second here. But people are sleeping on DM. I do know, I did see a comment in one of my videos asking in terms of like, did we not miss out on DM? Because you guys are used to seeing like, very low price altcoins, right? Compared to Venice, if you look at DM, you'll be like, damn, we already missed the boat, right? Because this is at over 1,005, while Venice is just at $18. But not looking at the market cap. The market cap tells us everything we need to know about this altcoin here, right? The price right here that you see is based off of the supply, and the supply being low, meaning this has pumponomics written all over it, right? This can pump really quick. Obviously it can dump really quick as well too, because of the amount of supply that is here, right? And the only way you can make DM is you have to stake your Venice, right? Venice, you stake Venice, then you get rewarded some DM tokens. That's why the supply is infinite, but it's very low in terms of how it can accumulate here, right? So now you're looking at this at a $56 million market cap, while you're looking at Venice about 800 million market cap, right? So I'm not saying this is going to flip Venice at any point in time. I'm just saying you can actually infer how high this can possibly go in terms of the market cap it's at right now. Next, you got Dolphin. We talked about Dolphin countless of times in this channel here. This is pretty much our kickoff to AI inference as of right now. We killed it with this Dolphin trade here, and I don't think it's done at all. I don't think it's done at all with a 50, let's just call it $16 million market cap, right? People may be looking at it of the fully dilution and things like that, but just know the flywheel that Venice has is going to be also adopted for Dolphin in a better way. You just got to wait for that flywheel to kick in, and you will start to see Dolphin actually take off crazy. Now, Kath here actually put out a nice little tweet here. I should follow him. Every private AI token in crypto right now that he's tracking, these projects deliver uncensored, privacy-first AI inference and encrypted computation on-chain, unlike centralized models that log everything and enforce filters. So first, you have VVV and DM. Remain the clearest, most liquid pairs. Venice runs a private generative AI platform on base with open source models. You stake VVV for a proportional API capacity, yield, and right to mint DM. Each DM delivers $1 of daily perpetual inference credit that never expires. That's huge, right? This converts compute into tradable, ownable asset, right? Platform revenue, buyback, and burns. We talked about that, right? But on that note about DM here, why a lot of people are also not forgetting, but are missing what DM is probably going to be building that is looking very interesting, is that other projects are going to start to be using DM, right? As you can, there's a new launch pad called Liquid Launcher on Base. This is actually from the co-founder of Clinker, right? If you guys don't know, right? This thing allows any altcoin that is going to be launching on their launchpad to be paired with Diem, which creates their plan is to create a whole different new flywheel for Diem as well. We will talk about that in a whole different video. I just don't want to add it in this video here to make it too long. And to that, GW Jackson put out this tweet here. How might the market react and change when Diem lending protocols gain traction, become reputable, and your yield on Diem surpasses the yield on VVV? Now, there's two new altcoins that will be coming out very soon. Antseed, right, which you can actually start to mine as of right now. Carpe Diem, right? This is the two altcoins that are heavily connected to Diem, right? You got Antseed here, basically, which is going to be the open marketplace for AI inference, no gatekeepers, peer-to-peer on-chain payment, verifiable reputation, but it's also paired with Diem. Carpe Diem here, which is the decentralized marketplace for Diem inference quotas, which is going to be launching in June, backed by Lumen Labs. Diem is the tokenized inference, right, and accounting liability to Venice, a product for AI, for agents and inference consumers alike, a yield-bearing asset for you. And as you guys can see from Carpe Diem's reply at the bottom here, we believe the market hasn't priced the Diem token correctly. Protocol pays out credit providers rewards in Diem, buying it at market price, therefore exerting constraint buy pressure on Diem. So there's going to be some buy pressure. Remember, you got to look at Diem here, and you can see the amount of tokens here. It doesn't take a lot to put some buy pressure on this bad boy. So this is going to be something that you guys are going to need to keep your eyes out on. This is the three that I talked about here, but let's get into some other ones. Next, you got OpenGradient, which has been heavily compared to Venice. So far, this is one of the new launches. This was a Titan launch that came out on Virtual Protocol. Right now it's sitting at 16, basically 17 cents. Market cap of $31 million, FDV of $165 million, right? So there's going to be some inflation to come, actually 10x, damn near 10x, just under 10x inflation, as you can see from the circulating supply to the max supply there, right? There is a year cliff for investors as well. Now, Anderson here, you guys should follow this person. They've been making some good posts on some altcoins out here, right? That I can use, obviously, for these videos. But verifiable intelligence on chain, the decentralized network solving the AI black box. Every inference is verified using T plus the ZKML proofs at consensus level. But now the token utility essentially is used to pay inference, right? Staking, governance, priority access, and more. A token with real demand, pretty much. But this is the part here. You're going to be using the OPG token to pay for your inference, just like you're doing with Venice. This is why it has been highly compared to Venice as well. Now let's get into these low caps that you guys probably want to pay attention to as well. You got Surplus here, Surplus Intelligence. This recently came out. I did miss it while I was on a trip for a bachelor party, but this one has went absolutely nuclear, right? We missed this one. We found some other ones that we tried to trade, but this one has been the winner by far. Surplus essentially is now pretty much, if you guys want to look at it, it's a marketplace, right? It's obviously they are a marketplace, but it's a order style AI inference marketplace connecting users who need cheap inference with holders offering surplus Venice/DM credits at a discount. So they're also having their kind of flywheel connected to the whole Venice ecosystem. This is also built by an ex-Coinbase engineer, right? This is going to be something interesting here. And as you can see here, this is exactly one of the DeFi primitives that John Shapeshift highlighted as it's needed, right? So this is pretty much something that connects directly to the Diem here. As you can see, this is also, well, let's look into this image here. Diem tokenizes perpetual inference and creates a new blockchain primitive that yields $1 of compute per day. There is so much nascent opportunity to build a whole perpetual inference DeFi world on top of this, which Surplus is using. Just scratching the surface with a few ideas here, right? You're gonna have your inference marketplace. Expiring inference credits can be bought/sold at a discount. That is what Surplus is doing. You got inference lending, which is going to be renting out unused compute. Let's look for a altcoin that will be doing inference lending, right? Then you got inference as high LTV tokenized collateral, may be one of the most predictable collateral assets in DeFi. Then you got inference leverage setup that allows you to borrow against your staked Diem and auto buys more Diem capacity when needed to scale. Then you got Diem yield markets various ways that offer those DM opportunities to earn from their unused inference. Then you got inference sharing, right? Agreement between users to loan inference back and forth specific days or time periods, right? So you can see how DM, why I told you guys DM is right now is very undervalued for what they could potentially be doing. These are all other categories that you can look to for other altcoins that could be building that could connect to DM as well. This is why I'm bullish on DM, but this is also what Surplus is doing. They got the inference market, right, which is going to be expiring inference credits that can be bought and sold at a discount. So this is crazy. This flywheel that is happening between the whole Venice ecosystem is honestly insane. Lastly, you got Roba. Roba is actually a robotics altcoin that is actually bringing some compute over to robotics, as it's very important for robotics as well. So this is going to be something I'm thinking that is going to be kicking off when the whole robotics narrative kick off. As you guys know, I've been talking about robotics so much on this channel here, but we will talk more about Roba in a low cap robotics video. But we're going to highlight this quick article that they dropped. Robotics is consolidating into a real stack. No code plus compute will decide who can actually build. Now, I just want to highlight one thing that they put in this article here referring to compute. The upcoming Roba compute service fits into the same shift towards high iteration robotics, where team needs affordable access to simulation and training runs to keep moving. If robotics is becoming more modular, then compute becomes the fuel that lets builders iterate at a speed the new stack demands, right? That matters for startups, labs, solo builders who can't afford to spin up a full infra team before they can even test a robot policy. So what makes this moment different from past robotic cycles is the industry is no longer chasing only hardware demos. The real frontier is making robots easier to build, easier to validate, and easier to ship. Simulation platforms are getting more realistic, foundation models are becoming more general, and deployment stacks are becoming more portable. The winner will be the teams that reduce friction across the whole workflow, from model to motion to monetization. So that is the compute part that is coming for Roba right now, why they're tackling that and everything, right? But we're going to talk about a little bit more about Roba in a low cap robotics video that I got coming for you guys, right? But this is pretty much the video for you guys. What do you guys think about inference and compute becoming a new asset class? Leave your thoughts in the comment section down below. And if you guys haven't subscribed yet, please do so. We're on that road to 30K subscribers. If you guys want to help out with that, hit that red subscribe button. I'll show you guys later. Peace, YouTube.